Hello, listeners, and welcome back to another episode of ITPR Unpacked. This month, I am by myself. Anthony is not with me, so it's just me. However, I do have a special guest joining me, and today we are talking about business growth and how you set up a business for growth. But before we get into that, please remember that we are on Spotify and YouTube. So if you like what we talk about, please do share it, subscribe, like, comment, all those great things. And also, we will be promoting it on LinkedIn. So please, if you see it on LinkedIn, share it with your network. So, without further ado, I would like to introduce Sian Howe. Now, Sian is the founder of Moxie Financials, a specialist provider of accounting services that support businesses who want to scale. So she's the perfect guest to join me here today. Hi, Sian.
Hi, thank you for having me.
My pleasure. Now, you describe yourself as someone who wants to create a business world that works for real life. So we'll get into that and what that means. But you have two children, two young dogs. Oh, sorry, I got that the wrong way around. Two young children and two dogs.
I do, yeah.
A wife and a business owner. So you've got first-hand experience of what that is like. And
Yeah.
I'm sure a lot of people out there who run their own business can feel your pain and our pain, but also what it's like to run your own business and juggle life at home as well. So welcome to ITPR
Thank
Unpacked.
you.
But I've tried to give an introduction to you and already messed that up. So why don't you?
It was a lovely intro.
Why don't you do a better job and just introduce yourself?
So I am an accountant by trade and I'm very passionate about growing businesses. So I trained in practice in one of the biggest practices, Deloitte, and then I moved into industry. And an accountant's role in industry is to grow the business, or there are different roles in industry, but the roles I had was to grow the businesses. And they were very big businesses, big finance teams helping the other people who run the business actually get the growth out of it. And small businesses don't get that. So that's what we set up Moxie for. And we have had some great success so far. We've been sort of in Moxie full time. I say we, it's me and my poor long-suffering husband who props me up. But I've been in Moxie now for just over a year, and we've had some real success in getting businesses growing, getting them funding, getting them help to get from where they are to where they want to be. And most people know where they want to be, but they don't know how to get there. And that's what an accountant's role really should be. And yes, there's tax returns and there's accounts and there's payroll and all of that stuff needs doing. But the bit that's missing from accountancy is the growth, and that's what we do.
Fantastic. And that's kind of what attracted me to try and find out more about your business, really, because it was a very different take on any other accountants that I've dealt with. Like you say, very good at end of the financial year, but having that kind of conversation around growth and using investment to grow,
Yeah.
and having that conversation with accountants was something very new to me. But can I ask you, so what made you think, after your experience at Deloitte and working in different businesses, what made you think, right, I'm going to break out on my own and I'm going to start Moxie? Like, where did that come from?
Insanity, probably. So my husband runs an online garden retailer. It's about 20 million turnover, so a fairly hefty small business.
Yeah.
And he is also an accountant by trade, and we had continually come across different accountancy firms and fairly large ones in the north that offer the same service over and over again, very old fashioned, very one size fits all. And I just thought, this is rubbish. If everybody's getting this same service, then that nobody is maximizing what they're doing with their business. Big companies, so the big companies I've worked in, big FTSE size companies, big PLCs, they have sort of commercial finance teams of say 70 people. That's 70 people helping to grow the business from the inside.
Yeah.
And that is your sole job. You are a finance business partner, not an accountant.
Yeah.
So you go and help all the different operational areas to understand the numbers and use those numbers to drive it forward. Small business gets none of that at all. So I was like, how on earth are people, you're flying blind most of the time. Most people get accounts and a tax return once a year. See you next year. It's exciting to see what's going on. Bye.
Yeah. And you know, most small businesses, it's up to the owner, founder to think, okay, how am I going to grow this business? But that, you know, accountancy is probably not the what their background is.
No.
So they're kind of, like you said, doing it blind to a certain extent, and you're
Yeah.
relying on them to think about new ways to try and grow the business without perhaps having that financial know-how.
Yeah, and also knowing what's available to a business. A lot of people don't know how much funding is available.
Yeah.
And a lot of people find funding really scary. It's like it's termed debt as opposed
Yeah.
to funding. I
Yeah.
talk about it as investment or funding. And I'm not talking about equity investment here because I don't think that suits a lot of small businesses. I'm talking about debt, but it is in the form of funding you to grow your business. It's there to help people to grow, but it's helping businesses to understand, what will I do with that money and how do I make sure that I can definitely pay it back, and then it's less scary. So that's one of the key things that's definitely missing from accountants' advice. And accountants should be out there talking to different businesses and talking to different providers of funding, but they're not.
Yeah.
And the maddest thing I find is that accountants will have lots of different clients across loads of different industries. And what we've been able to do is a huge number of synergies across our clients that have each got them additional sales in their business or found them a brilliant service that they didn't have access to that's going to help them to grow their business. Every accountant should be doing that, but they're not, and that's a real shame. And being a founder's bloody lonely, isn't it? Like you are the buck stops with you. You are everything. You are responsible. If you've got a team, you're essentially responsible for them paying their bills as well as you paying your bills. You've got everything that you don't understand. So take accountancy, for instance. You don't need to understand the intricacies of tax law, but you are and ultimately responsible for the filing that's going in. There's all those things that you might be very good at what you do, but you're expected to be very good at all these other things as well.
Yeah.
And that is a really lonely place to be. And that's the support that we give our clients, is that they can come and talk to us about anything. We have at least monthly meetings. Most of the time we talk on a weekly basis, with some on a daily basis if they're going through something big. It's just having that other person that understands business and also that can bring ideas from other industries that might suit your industry, but nobody else has told you that.
I think that's really key. And doing it now for myself for 5 years or so, coming up to 5 years, that's one of the things I realized quite early on, was how all of a sudden buck stops with me. But when I look around and just say, okay, well, I need to talk about some funding or even some financial advice, who do I go to?
Yeah.
But I didn't necessarily have that support network around me at the time. And I found it quite lonely, even if you just wanted to talk over, I'm having this particular problem, or and there's an issue and I just need to bounce some ideas off. Ultimately,
Where'd you go?
Where do you go?
So absolutely.
So that, I think, having that, not just an accountant, but somebody else to talk through that who understands business as well is a valuable asset that you can provide, basically, because that's what business owners need. Now, do you just target sort of small businesses then, or are you kind of small to medium?
Small to medium. Yeah, basically we look for ambitious businesses because we are not the cheapest accountants. So you could go and get your accounts done for £40 a month and you will not get anything near that with us.
Yeah, but that's just, like I said, a monthly fee, and you might just do your payroll and
do your accounts at the end of the year.
Yeah.
So really, we're not of use to anybody who's not trying to grow their business. If you're trying to grow your business, our service is what you need.
Yeah.
So we kind of span a lot of size as a business. We've got everything from startups up to 5 million turnover businesses.
Right,
so we're spanning quite a breadth of businesses. But it's what they're trying to do with the business as opposed to the size or the industry or anything like that.
Okay. And so I mentioned earlier that you said you wanted to create a business that works for real life. So what does that actually mean for you and possibly for your clients? We've talked a little bit about what it could mean for your clients, but what does it mean for you?
Well, if you ask my husband that question, I think he'd say I haven't achieved it. What does it mean for me? It means, so our business, the whole aim of our business is to help other people's businesses grow, but as a knock on, our business grows. So the bigger our clients get, the bigger we get as a business. So that really works for us. The intention when I set out was, I'm going to be this person who's available loads for my children, and I've got all this flexibility. I don't know, I'm going to go and get my nails done once a week or something like that. And that's just not real life. It's just not real life at all. But what I have created is something I absolutely love. I love celebrating with my clients and helping guide them through really difficult times and helping people to see that you can grow your business. You really can, and there is no limit to what you can do with your business. But also, that it should start with what you want. And we start with, and I should probably do this with myself actually, busman's holiday, isn't it?
Yeah.
We start a business plan with what does your life need to look like? So every
Right.
business should have a business plan, and it shouldn't just be something you put on the shelf, you
Yeah.
use
Yeah.
it once and off
Yeah.
you
Of
go.
course. Yeah. Yeah.
It should then be formed to do forecasting moving forward. So we start with a business plan and we go, right, what does your life need? What are the things you really want? And one of our clients said the other day, oh, I just really want a Porsche. And it is those things of like, what if you've probably left a stable job in an industry you're really well respected in and you're really good at what you do.
Yeah.
So what does this business need to give you personally for you to think, yeah, it was worth me doing that?
Yeah.
That's where we start everything. And that's building a business that's for you. I personally want to grow a huge business,
Yeah.
but it might be that you want to grow a business that just allows you to take 3 holidays a year, work 6 months out of the year. Like, it's got to be what your life needs to look like drives your business, not the other way around.
Yeah, I mean that certainly resonates with me because I remember when I first started out, I had a view of I'll just work 4 days a week. I'll take lots of flexibility around the kids, and live this kind of perfect work-life balance. And it just didn't work out like that at all.
Yeah.
I'm still trying to work a 4-day a week, and it's just not happening. And what I didn't realize at the time were the very very early morning starts and even the weekends and things like
Yeah.
that. I'd just probably not factored that in. But at the same time, it's in a business that I feel so passionate about, and you can see the impact that you're having, not just
Yeah.
on your clients, but also on the people who work with you and for you, and that's a totally different shift from working in a business
Yeah.
where you're an employee, and that's a massive. It's just a very very notable difference for me, and so yeah, I can sympathise with you there. So for businesses who are looking to scale, then, are there things that some people get wrong, or are there things that people can look to try and do better or right? And any advice on that front?
Yeah, so there's a couple of things. The first one is that you've got to decide what you want. Like we just said, it's got to be what your life, let it be driven by your life, but
Yeah.
don't feel limited by anything. There is no limitation to what you can do with the business if you want to do that and if you have the right people around you to support you. So that's number one is decide what you want for your life and then drive your business from there. The second one is you've got to have a business plan and a forecast. So you do a business plan, you set it at the beginning of the year, this is what we want to achieve.
Mm-hmm.
Then on a monthly basis, you look back at that business plan and you say, are we over or under? What's that then going to mean for going forward? You've got to spend that time once a month just to sit down and go, what's my business doing?
So just on that then, so a business plan, are you talking the financial plan basically?
Well, both the financial side and the more operational side, because the financials are really important to know what you're going to be making,
Yeah.
profits, what your cash is going to look like.
Yeah.
But actually, so I don't know, say you want to turn over 600k this year, you have to work back to, and that means X number of clients at this amount. And actually, what do
Yeah.
I then need staff wise to do that? What do I
Yeah.
need software wise? Like, you've got to work back to, how do I deliver that? You start with the goal and you go back to the reality, I guess.
Yeah, the big, hairy, ambitious goals.
Yes.
Seen
Yes.
it coined.
Yes.
Okay, so you check that on a kind of monthly basis.
Yeah.
Your business plan and your financials, see where you're going. That's one thing you can do. What about something that you've seen people get wrong, or a common theme perhaps that you've seen with businesses that you've worked with now or in the past?
Too much time in the business and not enough time on the business.
It's a classic one, really, isn't it?
Yeah,
Yeah,
and
yeah.
it's every client we work with has two challenges, and it's either of time or money or a combination of the two.
Yeah.
And if you haven't got a lot of money, you need a lot of time, and if you haven't got a lot of time, you need a lot of money.
Yeah.
And I think the temptation is always to be working on what's going to generate me revenue right now.
Yeah.
And we work with a lot of agency clients, and that's a lot of the focus is, and we have the same issue. Right now, we're absolutely flying. We don't want any more clients, but so we don't put the time in to
Yeah.
generate new clients. But then when we do need new clients, we then haven't got the cash to generate the new clients. So it's
Yeah.
like you've got to be constantly thinking ahead, even though the temptation is, oh God, I've got loads of clients now. I'm absolutely fine. I've got to deliver this work to them.
Yeah.
And I've got to make the clients happy. But particularly if you're on like individual projects as opposed to a retainer model, that project's going to come to an end, and where's the next one coming from? So it is taking that set time, and I think it's important to block it out a set time, ideally a week, but if not a week, then definitely a month, where you sit down and you go, right, where are we going? Where have we
Yeah.
come from? Where are we going? And also, I think the other thing is not celebrating. I think inherently business owners are ambitious people. They're usually perfectionists. They want to deliver a lot to their clients. And I think you achieve the thing that you set out to achieve, but you don't celebrate it. You go, well, I haven't achieved that thing yet. So
Yeah.
it's the constant like chasing the next thing and the next thing.
Yeah.
I think sometimes, and that's one of the things we do a lot with our clients, is sit down and go, well, actually, look where we were 6 months ago. Look what you've achieved. How would 6 months ago you feel about current you?
Yeah.
I think we don't do that enough.
Yeah, that's a great point, and I'm guilty of that myself, and not celebrating the milestones. And I've tried to become better at celebrating the smaller wins rather than just working towards that, the one big goal.
Yeah.
And then always kind of looking at that as the end game, saying, "Oh, I'm not there yet. I'm not there yet." And so you get kind of bogged down, whereas you should try and celebrate along the way, which is great advice, to be honest. So you've also said, and we've spoken about this before in the past as well, that you don't do jargon, hate jargon. So what's one buzzword in finance or business that you would like to see gone for good, binned straight away? Room 101 it.
Oh, there's so many. I love Room 101. Probably not binned, but better explained is director's loan account.
See, I don't even, go on. Yeah.
So a limited company is separate to a person, right? So when you set up a limited company, you are not the business. You own part of the business, but it's a separate legal entity. And if you put money into that business, then it owes you it back. If you take money out of it and it's not in the form of a salary or a dividend, then you owe the business that money. And a lot of companies are running a director's loan account that the directors don't know about. And there are real tax implications to that. But I think people don't get, so in our monthly management accounts packs, we list the director's loan account, and also we suggest how the clients will be able to get rid of that, because you can't issue dividends if you're not making enough profits. So you've got to think about salaries, but you've got to think of that in advance. So you've really got to be aware of what that number is, what the deadline is to clear it, and if you don't clear it, what the tax implication is. So director's loan.
So on that then, so say if you didn't know that, and you're going on in your business, you get to the end of the tax year, you go to your accountant at the end of the year, they come back to you and say, right, you owe the business this much amount. That's how it would work, right? If you're not, like you say, keeping regular check and you're looking at it regularly, and you're just using an accountant once a year, that could catch you out. Yeah,
definitely could. And by the time, because if you get to the end of the year and you've not been doing your numbers for the full year, by the time your accountant has actually had time to do the numbers, and if you're, as we all are, a little bit lax with the admin, and it takes you a bit of time to get things over to the accountant, you're just limiting the amount of time that you've got to clear that off. So it's definitely something that you need to keep an eye on. If you've got an accountant, just drop them a note and say, can you let me know what my director's loan is? And if they don't know, then they can tell you how to find out.
Right. Okay, so on a similar note then, there's one buzzword that I've been hearing quite a lot, and it's not just in accounting, it's across all kinds of industries. It's fractional. We have fractional CMOs, and now there's fractional CFOs. What's your take on the term fractional? Is it just a fancy way to say like outsourced CMO, outsourced CFO?
Yeah. I don't know how. I have mixed feelings about it. I think it's brilliant that people are now having access to those kind of services. But I think it's a bit like, and many women will kind of get me here, and probably their husbands will understand because of the financial pain, weddings. The minute you put wedding on something, double the price.
Yeah.
That light that you could buy for your birthday party, wedding, double the price. I think it's the same with fractional. Outsourcing something, I think it's really important to outsource the stuff you're no good at, because that does give you time to generate revenue, generate new clients. And outsourcing is really important. But just because I'm a fractional FD now means I'm charging you £500 a day. Actually, is it because you need that service, or could you get an alternative service? So what we provide is, I'm going to use the term fractional, but a fractional finance team. But we are an outsourced finance team. So we basically give our clients access to an entire finance team. Now, if you went and spent the same amount on a fractional FD or finance director, they wouldn't be able to do a lot of the services you get from us, because they're not going to do your bookkeeping or your VAT returns or your tax returns, because they are a specialist advisory.
Whatever.
They're just it's usually people who've been very successful. And I think if you are a fractional CMO or CFO and you have done that role, having the ability for a small business to access a service like that, amazing, because
Yeah.
you have a hell of a lot of experience and that's invaluable, but it's also really expensive. So
Yeah.
I do think it's kind of just, it is a buzzword, and you do have to be really careful when you take on people like that actually to look into their background. Do they have the background that they say they do,
Yeah.
or that you would expect of somebody at that level? A lot of people who are coming to run their own businesses, and particularly in your space, will have come from big agencies, so they'll understand the structure of a senior leadership team.
Yeah.
So have a real look into that person and check. There's a lot in the finance world who are calling themselves fractional FDs, but don't actually have that experience. And if you do have that experience, you're worth every penny. If you don't, you're still better off with your standard accountant.
Okay. So I want to talk a little bit about growth as well, seeing as while we're here.
My favourite topic.
I know, yeah. So let's talk funding then. And you mentioned earlier about debt, but not seeing it as debt, seeing it as funding or investment. So is there anything that business owners or founders should have in place before they start speaking to investors or applying for any financial support or funding?
Yeah, so there's two things. One, good numbers. So you need to be doing your bookkeeping regularly so you can produce management accounts, ideally with the help of an accountant. So we've had a number of instances where clients have come to us having been rejected for financing, and it's because the numbers that they've produced with their understanding of accounting are drastically worse than the reality. So we've taken them, tarted them up a bit, made them right, and then they've actually made a lot better profit than they thought they had.
Yeah.
And then they've been able to get the funding.
So I'm going to stop you there if you don't mind, and we'll come back to the growth. But is that not just a version of cooking the books?
No, it's making them right. So what you expect as a normal person, as a non-accountant, where you expect the numbers to go, usually follows the cash.
Right. Yeah.
But that's not how accounting works. So when people do cash accounting, as I'll call it, the profits will look very different to how they should actually look.
Right,
so when you sit down and you properly... So I'll give you one example, and it won't work for agencies, but for a business that has stock, we had a client who came to us and they buy stock, but they hadn't sold that stock, so technically they still own that asset, but they had put it through their profit and loss as if they'd already sold it, but they hadn't actually had the sales, so they made themselves really, really heavily loss making because they didn't understand how that worked. So we took a look at it and we went, no, this is wrong, this is wrong, this is wrong. Let's make it right. Now actually you're making a lot less of a loss than you thought you were, and we've managed to get them funding. So it's very, very easy to get this stuff wrong because fundamentally you haven't trained for years to be an accountant. That's what accountants are trained for. So that's the first thing, is doing management accounts, getting the numbers in a really good place, having somebody look over them who knows what they're doing before you go to funders, and then understanding what the funding out there is. So a lot of people go to your iWalkers, your Capital on Taps, because they'll have got your registered address and they're sending you letters. You've been pre-approved for £35,000 at an insane interest rate. They are very clever in their marketing. It's also super quick, right? And borrowing money,
account the next day.
Borrowing money shouldn't be that quick. And what they're doing is they're taking risks by giving you that money really quickly, but then you're paying for it in interest. So you're paying for the fact that they might have lent to 5 different people and 3 of those won't be able to pay it back, but you might be able to pay it back, but your interest rate is reflective of those 3 other people. So it's definitely about knowing what's out there. And I bang on a lot about, up in the north, it's called the Northern Powerhouse Investment Fund, but it's available across the UK. The British Business Bank have made a lot of money available from the government to help grow small businesses. That is a really solid place to go for debt funding. There's obviously equity funding as well. So there's investment, as we typically understand it, is somebody gives you money and takes a slice of your business. And in my mind, if you're looking for a lot of money, that's where you go. But if you're looking for 50,000, 100,000, anything up to sort of 500,000 to grow your business, go down the debt route, particularly look at anything that's backed by the British Business Bank. If you're early in your business, a startup loan every day of the week. Google startup loans. Any accountant should be able to help you get that application in. It's a brilliant, really brilliant scheme. You can get up to £25,000 per director as long as your business is in the first 3 years of trading. And the interest rates are really good. It's a really, really strong place to go for initial finance. Initial funding, and then the British Business Bank after that is again really strong.
Giving out equity is always it kind of rankles with me because I think if as a business owner, you don't want to give away. You've probably invested what 15, 20 years of your life.
Yeah.
You've got to be in a really good position mentally and business wise to think actually right, and I can see where I want to take this.
Yeah.
I'm ready to give some of it away.
Yeah.
In order to kind of get me to the next level.
And I just don't think you need to in a lot of instances.
Not in the certainly. I don't think in the smaller in the youth of a business. As it were.
No. And also if you don't need and there are a lot of very young businesses that are particularly in the tech world that
Yeah.
need a lot of money
Yeah.
to get going, and that's
Yeah.
where equity is perfect. But also a lot of investors, and there's a lot of investment events that you can get yourself to with investors, particularly again in the north. A lot of the investors will tell you the things they're looking for, and they're not looking for your run-of-the-mill businesses,
Right.
which is actually really good because I don't think they need equity investment. They need debt. And
Right.
that's where this British Business Bank money really comes into its own. But the big banks are getting more into it now. So the British Business Bank money exists because the government identified that there wasn't enough lending to small business. But now the likes of NatWest and Lloyds are doing some really good small business loans, some really good schemes to support small business. So the bigger banks are coming back into the arena as well.
Right.
There's a lot available that people don't understand is available. It's about knowing, I think a lot of our success in getting funding into our clients is knowing what the investors are looking for, having really good close relationships with them, understanding how we present our clients in the best light, because you can think you're a very investable prospect, but that doesn't mean an investor will.
Yeah. Yeah. Fascinating. Makes me want to go and speak to the bank right now. So you also work very closely, as you said, with kind of creative businesses, service-led businesses.
Yeah.
Are there any challenges within those businesses that are different from your typical small to medium-sized businesses?
Yeah, it's the unpredictability of revenue, I think, a lot of the time. So if you run a shop, you know on average how many people are going to come through your door and what their average spend is going to be. That's really predictable. With service-led businesses, you are having to generate those clients. If you've got retainers, amazing. That gives you sort of standardized monthly revenue that you know is going to come in. But you're often the first to be cut when people are struggling, so you don't know when those retainers are going to come to an end.
Yeah.
If you're project based, it's even harder because we're working with a client at the moment who is, because it's August, they are waiting for a load of contracts to come in that won't hit until September because everybody's on holiday.
Yeah.
So it's like it's very much feast and famine, and being able to forecast for that and understand, well, actually last year this is what our trends looked like, and we do a lot of trend analysis with our clients to help them predict what's going to happen going forward, so that you can say, right, well, my cash is going to be really tight here. How do I work for that 4 months, 5 months, 6 months in advance? That's the most challenging thing with service businesses, and it's across the board. Whatever service you're providing, it's the same thing, same problem.
So one of the things when I first started, obviously, I mean, you touched upon it earlier, business plan, finance plan, and one of the first things I had to get my head around early on was cash flow and your finance plan, and how different they are in the world. I kept looking at my finance plan, thinking things are going great.
Yeah.
Everything's going okay. And then I was making financial decisions off the back of my finance plan because I thought that's what my finance plan was for, and not paying enough attention to cash flow. And I've learned over the years, it's a well-worn phrase, but cash flow is king.
Yeah.
And so now I don't necessarily worry too much about the finance plan. Cash flow is where I spend daily. Become obsessed with my spreadsheet on cash flow. And for small businesses, do you see that sometimes is a problem in the fact that they're not monitoring their cash flow enough?
Yeah, and I think accountants don't explain it. So there is another saying that I hear a lot, or I was told a lot when I was earlier in my career, and it's turnover is vanity, profit is sanity, cash is reality. And you never hear a company go bump because they don't make profits. You hear a company go bump because they don't have cash to pay their suppliers, to pay their employees.
Yeah.
And I do think there's a big mismatch between profit and cash. And annoyingly, you pay tax on profit, not tax on cash. So people feel very much like, oh, I'm making profits, I'm paying the tax man loads. Why do I feel like my back pocket's empty? And it's that understanding of the difference between profit and cash. And that's where we come back to where you asked before, is that not cooking the books? It's the difference between the cash and the profit is massive.
Yeah.
And often people really get that wrong and don't understand in their business how that looks, and do use profits, and potentially when they get their accounts once a year, hey, look how well we're doing.
Well, that's it. You have an accountant who looks at your finances once a year. then it's too late by then,
Yeah.
because your year end's already over, and
Yeah.
you've already struggled through that year. But having somebody who's with you on that journey as you're going through it, to say, do the trend analysis, like you say.
Yeah.
So hang on, look, this is what's coming down the line. There's a train coming down the track here.
Yeah. Get out of the way.
Yeah, get out of the way.
Yeah.
So yeah, that's really valuable support, I think.
Well, and I think one of the things, again, coming back to funding, one of the things people are really scared of is debt.
Yeah.
But I say to every client that we work with that you need an overdraft if you're going to grow your business. You need a buffer. And this
Right.
is where I love the likes of Monzo and Tide. And when we started our business, we were banking with Monzo because they will give you a bank early in your business. They will
Yeah.
give you an account early in your business, whereas the big banks are harder to work with. But once you've got to that stability and you want to grow, you have to move to a big bank who's going to be able to support you, and you have to get an overdraft, because
Right.
if you have got cash shocks that come out of nowhere, you need that buffer of, oh, well, it's okay. Yes, I'm in my overdraft, but I know this is coming down the line.
Yeah.
But not having that, you've got a hard stop. And I think every growing business needs an overdraft.
Good advice.
Thanks.
And so, as we get onto advice, actually, as we're kind of getting towards the end, it's been a fascinating chat. I've really enjoyed it. So we're thinking about advice, and you've speaking to a founder of a business who's just kind of hit that messy middle stage of their business between being a startup and now they're really looking to scale, and they're trying to figure out what direction to go in. Like you said, they might be a little bit nervous about taking on debt because they've been through 3 years of pain, but they're now getting to that point where actually I'm doing okay and feeling all right, things are coming in, but I'm still not achieved my main goal. I've spent 3 years trying to just get things off the ground. What would be your advice for somebody who's in that position?
Sit down and look at it as much as you can. I think the first thing is do that, even if it's back a fag packet. What do I want to achieve?
Yeah.
And what do I need to do to get there? What does that mean in actual real life client terms? Because I think as soon as you get it down on paper, it becomes easier to achieve. I think when we're all thinking, oh, well, I want this big business, what does that even mean? Or I want this, I don't know, agency with 50 clients. But again, what 50 clients that pay you £10 a month? Of course not. Like, you need to get it down and written down and focus on that. Actually, what are the achievable outcomes? And then set yourself things. If I want to achieve this number of clients at this average a monthly retainer or this average project value, what do I need to do consistently every single week to move the dial to get me there? And I think everything is achievable. We work with a number of recruitment firms and they are brilliant for this. They know if they sit down and send X number of cold outreach every single day, that will convert into X number of new clients, which will convert into X number of interviews. They are brilliant for setting the minimum viable output that they've got to do every single day in order to get to new clients. And I think it's just making it real. You actually have to sit down and go, right, what does it really mean in numbers for what I want to achieve? It becomes drastically more achievable. And then get some help. Outsourcing, and I'm not just meaning accountancy. Get yourself a VA. If you've got loads of admin, you have to work out what the value of your time is. An hour of your time, is it more or less than you could pay a VA for an hour of their time to take the admin away, where you could be revenue generating or out at an event to meet new clients? Outsource as much as you possibly can, even when it feels scary to do so, because you are more valuable going out and finding new clients or doing the revenue generating
I feel
work.
like you've been speaking to my wife, because that's what she tells me all the time. All the time.
Is it because she wants a cleaner?
Well, maybe that too. But that's true though, because it does feel scary if you're starting to outsource things. Outsourcing things can become expensive.
Yeah.
And all of a sudden, then you're thinking, okay, well, I'm going to start now. Now I'm racking up more outgoings. I'll just do it myself. I know I can do it myself.
Yeah.
It's cheaper for me to do it myself, because I don't want to pay all that, because that's scary to me. That's outgoing.
It is, yeah.
And I don't necessarily at that point have the incomings.
Yeah.
So
and we've
don't do
absolutely
it.
been in that position, and this is where then having the funding really helps, because you give yourself a buffer. But even if you don't have the funding, or you don't want to look at getting the funding, you still need to outsource. But what you need to do is make sure that it's flexible outsourcing. So just work with people that are on 30-day contracts with you, so that you can turn it off very quickly. Or work with somebody who is able to help you generate leads as opposed to working with a VA, or
Yeah.
do things that are going to feel comfortable in the first instance, but just brings, if you are doubling your time, tripling your time that's available to you, because you're not sitting there and doing your bookkeeping on a Friday evening sat in front of Gogglebox, which
Yeah.
is way better just to watch. But if you're spending that time, I don't know, sending LinkedIn messages, it's so much more valuable to you. And often, if you were doing your bookkeeping versus me doing your bookkeeping, I'm going to do it 5 times as
Yeah.
fast. So
Yeah.
it's more efficient for people to do what they're really good at, even though it's super scary.
Yeah. Okay. So you're a business owner, parent, wife, mother to 2 dogs as well. How do you make it work in your business without burning out and crashing out? You've got a lot on.
I don't. I think it's really, really bad that the world, and social media in particular, is really bad for showing how everybody's got it nailed.
Yeah.
Nobody's got it nailed. I would say that there is always, I'm probably 75% there. There's always a fire going on somewhere that I haven't put out.
Yeah.
But I think it's a case of knowing which fires to put out. Like, is it the end of the world that last week I missed a dentist appointment? Well, my dentist is really annoyed at me, and
Yeah.
I need to apologise when I'm next in. But actually, I had something more important to do that day, and it slipped out of my mind. Like, I think it's just a case of accepting the messiness of it all.
Yeah.
Like, none of us are nailing it. Nobody is nailing it, no matter what they tell you. They put all their highlight reels on Instagram, and that's what you see, and then you feel rubbish about yourself.
Yeah.
But if everybody's happy and healthy, and your business hasn't gone bump, you're nailing it.
Yeah, that's very true. And sometimes we can be too hard on ourselves
Yeah.
because we think that we should be achieving perfection all the time.
Yeah. And you
Um,
need somebody to reflect that back at you. And that's what we do with a lot of our clients. Again, it comes back to getting them to reflect on what they've achieved.
yeah.
And actually, growing a business is really tough. This economy is really tough. You're probably nailing it, but nobody's saying to you, hey, you're nailing it.
Yeah, well
Remember that
done.
you're doing that. And
Yeah,
also,
yeah.
we see a lot of different businesses. So we're able to say, like, in comparison to the industry, you're doing really well, or you're in line with the industry here. I think sometimes it's just somebody to give you a bit of a hug, and allowing yourself to be a bit crazy all the time. As long
Yeah.
as everybody is, as long as you're happy, that's the key thing.
Yeah, that's true. And I think coming back to what you said about why you started it and why you kind of that overall mission, that feeling you had when you started is I wanted to achieve this, and you're reminding yourself that actually, yeah, and I have achieved that. Because for
Yeah.
me it was flexibility around the children, and obviously not doing a lot of travel and being at home more. And while sometimes I think, oh, maybe I should be at home more. I'm not doing what I set out
Yeah.
to do. If I look back in comparison as to where I was, then I'm at home a lot more.
Yeah.
And I guess it's just the ability to try and remind yourself of that when you're right in the thick of it. I mean, everyone's bad at it, aren't they? About trying
Yeah.
to
Well, and
reflect.
also, if you're a parent and a business owner, you are setting an insane example for your children, and they will be really proud of you. I remember when I was younger, my mum worked full time. She's a hard worker,
Mm,
and I used to be really proud of her. Like, and I think now with my children, when I think, oh, I'm a terrible mum, I'm never around.
yeah,
Actually, I'm a better person for the fact that I do what I do because I love it.
yeah,
And when I'm super stressed and I'm not as present as I'd like to be, I do have to remind myself that I'm showing them what women can do, what people can do, what you can achieve.
yeah.
And you don't have to have a super background or like this really snazzy degree. You can achieve things and be like really inspirational to your children. And I think you have to remind yourself of that too.
I think that's a very good place to try and close it. Thank you very much.
You're
So,
very welcome.
big thank you, Sian, for coming to join me today, and filling the big shoes of Anthony, both
They are very large
yeah,
shoes.
both physically and metaphorically. So thank you very much to those who have listened and watched this show. Please remember to like, share, subscribe. And ITPR Unpacked is available on YouTube and Spotify. And we'll continue to share short snippets across LinkedIn. So look out for those, Sian, when they're on LinkedIn.
I will do. I'll like and share.
Thank you very much. And thank you all for listening. Goodbye.